This is IA Forward, your playbook for success as an independent insurance agent. Here to help you knock it out of the ballpark are your hosts, Shane Tatum and Tonya Lead.
Welcome to IA Forward. Shane, my insurance brain kicked in yesterday at the Hilton in Houston.
Oh, please do tell.
I had arrived at the Hilton on Thursday night, Friday morning at about 5 a.m. The normal person that valet parked the car was not available, and a security guard parked my vehicle. When I went to check out at noon yesterday, they could not find my car. In the 2 hours it took for the people at the Hilton in Houston to find my car, my insurance brain kicked in. And I started thinking, okay, if my car is gone, how do I handle this? Does my car insurance cover the fact that my car is gone? Does the Hilton's insurance cover this? How am I going to get home? Who's going to pay for my rental car? I totally went insurance geek and spiraled.
Obviously, security guard, that's a little weird to have your security guard instead of the valet park your car.
Well, there was nobody at 5 a.m. to park my car except the security guard.
I guess he or she just took it upon themselves to say, I'll park your car. Why not? But it's probably enough information to say that the hotel or the valet company or the security company, depending on whether that's a contracted role or not, certainly has some responsibility, if not all the responsibility. It does make you think about things like that. And if you had comprehensive coverage, physical damage coverage on your vehicle, you can file on that as theft, potentially. But then police report, there's a lot of messy stuff there. Obviously, the people that are doing the damage, the service that can't find your car needs to step up. But your brain starts going all these places. Obviously, this should be on the business's insurance, but what happens if they don't have the appropriate coverage because it's the security guard? What if it's excluded, if it's not the valet? There's so many insurance geek out things that you could pull into this conversation.
And I think I went through all of them in those 2 hours. Shout out to the folks at the Hilton Post Oak at the Galleria who did treat me to lunch and tried to de-stress me. I just wanted to go home. I knew I had this really long drive, and the bellman there has been there for 34 years. I've stayed at that hotel a great deal, and he's such a consummate professional. And he just says, Miss Tonya, I've got it. We'll find it. He's absolutely fantastic and a somewhat iconic fixture there at the hotel. And he just kept saying, we've never lost a car before. I said, I would think that would be a rare occurrence because Cadillac's not that easy to lose. Like, it's a pretty big vehicle. I got home at midnight last night. And when I got home, I was thinking, okay, I am going to crawl into bed and go to sleep. And my husband was watching one of my favorite sports movies, For Love of the Game, when I walked in. It was right in the 8th inning where it hits Kevin Costner that he's pitching a perfect game. Nobody's been on base. When my husband told me he was watching this, I let him know when I crossed over into Alabama because that's like an hour and 20 minutes from home. He told me he was watching this, and I said, clear the mechanism. He said, what? I said, for love of the game, clear the mechanism. And he said, what are you talking? I said, are you actually watching the movie? Have you ever watched this movie? He's like, yeah, I love this movie. But somehow he missed clear the mechanism. He called me back about 5 minutes later and he said, I saw where he does that. And I'm like, if you will watch the whole rest of the movie and pay attention, clear the mechanism is actually a thing. He had totally missed that.
People watch Bull Durham and miss breathing through their eyelids. So it happens. Clear the mechanism to me is like focus. There's also another great sports movie that has sort of that kind of mindset around, I think it's Legend of Bagger Vance, maybe, where the focus comes in on the fairway and the shot. I love sports movies in general. I could talk about an entire podcast series on sports movies. I think that's relevant to the insurance industry, personally.
This is a great idea. We should do this.
Sports movies are incredible.
Your clear the mechanism moment happened when you rock back on your heels and then you shift your weight forward to the balls of your feet. right before you speak or right before you go on stage to do something, you have this short stop moment where you shift your weight back and forward.
Oh, yeah. I didn't know I did it, but it makes sense. Heel to heel toe, heel to ball of feet. There's a whole thing there. Not everyone, by the way, is a balls of their feet athlete. There are athletes with different settings, and it's kind of shocking to find that out because I was always taught to be on the balls of your feet, never be on your heels. That ball played him. There's actually athletes that are better by being more grounded and more heel. That baffles me because I'm more of the balls of my feet kind of guy. So that's not shocking that I do that when I speak.
As a dancer, you ground through the balls of your feet. If your weight is so far back, you're in your heels, life is not going to work. You're going to be on the floor. It's not going to be attractive.
There's actually an infield drill, heel to toe, that starts with the toe up and the heel down. And I would have never been allowed to do that drill when I was playing. And so we would have never taught that. But now they teach that. And it's interesting. Now that I see what infielders can do comparably, there has been some obviously great infielders, Ozzie Smith, Jeter, we talk about him a lot. There's some great defensive infielders across our history. But now you just have more athletes. So I'm open to this idea that there could be better ways. There could be better drills. There could be ways to improve your game. I think that goes for everything, certainly the insurance agency business.
So for our listeners who have complained that we don't talk about sports stuff enough, there you go. There's our sports segment for today.
Sports intro.
I want to discuss an article that came out recently in Market Watch, but I've seen this everywhere, especially in the last year, and I've had this challenge personally here in the Florida insurance market. There was an article that came out recently about people that have FHA home loans and how they're not being able to afford their houses because of how drastically insurance premiums are going up. This article opens talking about how someone's premiums in California went from $7,000 to $12,000 in a year. They'd been in their home for 3 years. This happened this year. We're in a very similar situation. We had a very similar percentage increase, actually a little bigger percentage than that here in Florida. It makes such a huge difference in your standard of living. It puts that idea into your head of, okay, well, I thought I could afford this house when I bought it. I really can't now. And then there's other things you have to remove from your life if you decide to stay in your house. And it's the idea to me of owning your houses is the American dream. And if we're looking at people that make $40,000 to $50,000 a year, which are most of our FHA home loan people, what does that look like when you have rates that have those 40, 50% jumps?
I'm going to defend the insurance industry, of course, and be a big advocate here of the agencies and hopefully maybe help agents understand how to have these conversations. First of all, let's start with this is a real estate generated article. Market Watch is the first inclination of, okay, who's writing this article? What's the source of this article? The source of this article is to paint the mortgage industry positively and find someone to distract the consumers from what's going on inside the mortgage industry. Interest rates are up.
And we love our real estate and our mortgage partners, but they blame us for a lot of stuff.
It's definitely a strenuous relationship. We love our mortgage partners. We love our real estate partners. I know agents have mortgage partners across the country, and it's a big source of referrals and centers of influence. Look, we're in this together. The mortgage companies and industry leaders that try to throw insurance people under the bus, it's frustrating on my end because what you have in this article is, number one, state of California has had regulatory issues. And so we all know that, and we watched that over the last few years. We had multiple decades of suppressed rates. There's the foundation. What they don't talk about until deeper into the article, after they've gotten you with the headline of insurance costs so much now that people can't afford to pay their mortgages. That's the headline, right? Now we look at this and go, okay, wait a minute. This actual policy being indicated is the policy of a real estate professional. The policy is written through the California Fair Plan, not a private insurance company, which is even further of a depressed market because they're severely underfunded. The home is in the Sierra Nevada mountains close to Yosemite National Park. So we're talking about a mountain home, number one. We're talking about a major wildfire risk, number two. And so what we don't talk about in any of this article is the actual value of the home insurance that we're being asked as an industry to provide coverage for. That's just mysteriously left out of the article. And then you get buried deep in the article and you read that the average homeowner is expected to spend an extra $261 on insurance premiums this year. That's not quite the shock effect of the insurance premiums going up $5,000 a year and I can no longer afford it. And then the really fun piece of this is that our real estate industry is selling homes to people who can't afford it because an FHA-backed loan requires a 3.5% down payment. Industry standards, economic standards for years have always been 20%. Now we can get down to 3.5%. Oh, and by the way, if you don't have the 3.5%, we can help you with that. We can figure out a way to help you borrow for the down payment. And then we can load you up with PMI. We can load you up with all kinds of stuff. And then when the insurance premium goes up, we can blame the insurance industry for all the problems. Is that a good rant?
That's a good rant. As we read through the article, it does talk about Florida some, and it talks about how Utah saw the biggest jump in premiums between 21 and 25 at 59%, followed by Illinois and Arizona. And it does go a little further, throughout the article, the significant upticks in Florida, South Carolina, Georgia, all of the things. But going back to the idea of people being able to get these home loans, I was really shocked 2 weeks ago. One of my very best friend's daughters, who is 22 years old, just graduated from college and is about to get married. She works full-time at a snow cone stand. He does not yet have a job coming out of college. They were able to qualify for an FHA loan to buy a house. All I could think of was this is a person that the last time she came to Florida, which was last summer, they rented an Airbnb that for some reason, I think I've had 4 of my friends' kids rent this Airbnb in Pensacola, and they arrive and it's behind 2 tattoo shops and like some kind of Chinese restaurant. And it is in the drive-by shooting area. It is not even in the stray bullet zone. Like, it is a scary place. And then I get these phone calls either from parents or these kids. Hey, Miss Tonya, like, there's 8 of them down there. They're scared to death. Yes, they can come stay at our house. But these are kids that can barely afford to pay $49, $59 a night to stay at Airbnbs. And they're being able to get home loans. And they have no idea what insurance costs, what this is. This article even goes on to say that I think it was something like 80% of people that get an FHA loan have less than 1 paycheck in the bank.
Yeah, and that's kind of part of the frustration when I read an article like this is we're throwing blame at an easy target, the insurance industry, while such a huge backbone to the economy and such an important element in the economy constantly gets tossed under the bus with the idea because it's mandated. I mean, you got to have insurance if you're going to get the part of the mortgage qualification. So it becomes a mandate. People get frustrated about having to pay a mandate and feeling like they're being forced to do something. But that financial interest that has to be secured and protected is the only way you're going to get qualified for the loan in the first place. That education isn't happening, which is full circle back to why the independent agency system is so vital. The advisor level of an insurance agent is so important. Being able to get in there and have that discussion, it's a slippery slope. The real estate agent referring you customers and the mortgage company referring you customers, they don't want you to mess up their their sell of their house or the mortgage that they're trying to book and sell and portfolioize out to the buyer and the buyers of these security elements that these things get packaged into. I mean, there are movies from the 2008 mortgage-backed securities and just what happened to that inside our economy. We continue as an industry to be thrown under the bus by our peers. We need to hold our ground, educate, and talk to consumers. We can't allow certain other industries to make us look like the bad guy. The reality of it is that insurance is not the reason you can't afford your mortgage. It's the reason being blamed by the other individuals in the equation. But the reality is you should have been sold the home in the first place. You shouldn't have been approved for the loan in the first place. But now that we've done all that, and people have gotten paid and people are getting paid, we're left holding the bag, right? That's the reality. I mean, the mortgage guy is going to sell the loan, all right? So they're going to make all their money up front and they're going to sell the loan. The real estate agent is getting their commission up front. You know, my question is that if others industries had similar compensation plans to what the independent agency did, where it was more of a long tail compensation plan instead of an upfront, front-loaded compensation plan, would they see the world differently if you didn't get all your money up front? They're like washing their hands and done. And then we're there for years and years and years. The mortgage company gets to say to the customer, when the customer calls and says, why did my payment go up $400 a month? Well, your insurance went up, so we had to increase your payment. Okay. We start that cycle. I think that good partnerships should be able to hold each other accountable for that. The really good agents are holding their referral sources accountable to those kinds of statements.
Another one of those moments in this article is that's diaper money. That's money for food that you're taking off the table. Yes, that's the case. I mean, you know, I can see where diaper money and food being taken off the table because you're having to pay the big bad insurance company. Of course, with ours, we had a double whammy because our taxes went up rather drastically. Welcome to Florida. But to me, it goes back to this idea of you should be able to buy a home coming right out of college. There are parents telling their kids, don't throw away your money renting. I think back to 19-year-old Tonya coming out of college. And if I had bought a house then, or even thought about having the money to buy a house, which I did not, I wouldn't have had a clue how to take care of that house. I mean, my poor dad would have had to have moved in the house because I didn't have a clue how to do that. Coming out of college, I always laugh and say that I had a pager. This tells y'all how old I am, but I had a pager that the company I worked for gave me. If somebody needed to get in touch with me, they would page me, and I would walk a block to the payphone on the corner and give it my quarter and call the person back. This was life. The idea that 3 months out of college, I would be buying a house is unfathomable to college graduate Tonya, just because of where I was coming out of school. I definitely wouldn't have understood the idea of trying to budget for an increase in taxes and insurance. I was just trying to figure out how to put gas in my car. And I was excited if I could fill the gas tank of my car up as opposed to just trying to put $5 worth in.
My story is we get married young. We're 22 years old. Our first place to live is an apartment. We live in an apartment for a year. We rent, and then we decide to buy this little home and remodel it. Now, I will say this. The home we bought, little frame, 2-bedroom, 1 bath, literally a 4-room house, very old, but built well, pier and beam, not on a slab. We added a bathroom and a utility room to the back of it. The cost of that home in 1997, when we remodeled everything, was right at $60,000. Okay, that was it. We went to the bank, we got a loan, $60,000. When I think back to these moments, we lived in that little 2-bedroom, 1-bath home for 8 years. We were 31 and 32 years old when we built our house. 9 years, 1 year renting, 8 years having purchased a home that we were able to afford We did not purchase a $350,000, $450,000 home at the age of 23, 24 years old. We purchased a little frame home that was probably not much to anyone, but it was affordable. It was cute, right? It was my oldest daughter remembers that home, loved that. She was born there. Both of my daughters were actually born there. The youngest doesn't remember it. She was less than a year old when we moved out. The oldest was 5, like when we moved out. Like she remembers it. Her room, the bedroom the girls shared. We didn't think a thing about it at that moment. The world was our oyster at 22, 23 years old. Let me peel it back a little bit further. We lived in very modest apartment and dorm rooms in college.
Yes. We did not have granite countertops in our dorm rooms.
We did not. So let's just keep peeling this back. 2 college-educated individuals, finance business majors, me and my wife, in the 90s, buying this little small frame house, thinking this is wonderful. This is fantastic.
We were proud of that house.
We were so proud of that house. We also lived in apartments, and I lived in a house my senior year with 5 other baseball players. There were critters, lots of really disgusting things because it's 6 guys. We didn't care, and it was cheap. My rent for that was $150 a month. Those were our college days. College housing was kind of rough. Julie had a roommate. Her and her roommate had a nice apartment. My view was that they were very upscale because they had a nice apartment. It was not a fancy apartment at all. It was a very simple apartment. I lived in borderline slums as a college student, and it taught me a lot of appreciation. If you keep peeling back, what creates the expectation that you're supposed to graduate from college, get a job, making a bunch of money, and buy a $400,000 house? Like, that is not a good financial thing to me unless you have a trust fund. Like that, for the rest of us that don't have trust funds, it's fine to rent. Like, I disagree completely with pundits and the Dave Ramseys on this. Like this, it's okay to rent for a couple of years. Get your feet under you. Save a little money. That money you're spending on rent isn't crazy throwing away money, especially when the house you're trying to buy, you can't afford, right? It's not the insurance industry's fault that your insurance premiums are what they are, because it's not the insurance industry's fault that the inflationary factors and the construction cost has gone up so high and that you can't build a house for less than $250 a square foot. That 1,000 square foot house, by the way, it was about 1,000 square foot, that 2-bedroom, 1-bath house. The reality is that there is no way on this planet that house should be $200,000. That house, even adjusted for inflation, should be about $80,000 or $90,000, period, today. Okay, that's affordable. Now, are people going to be willing, young people going to be willing to come out of college after living in granite countertop homes and fancy dorm rooms and settle for that? Because if you can't, then rent the apartment. That's my suggestion. I talk to my daughters about this, and it's like, don't load yourself down and go FHA. Because you can doesn't mean you should, because that doesn't mean you can afford it. And then turn around and listen to the mortgage company, blame it on the insurance industry because you can't afford your payments anymore.
So many consumers believe clickbait, right? And we can talk about all day long in a B2B world, but our listeners are dealing in B2C transactions, relationships, conversations. How can we help our listeners through conversations like this?
I think we have to be truthful. I think we have to have compassion, and we have to have some empathy there. But I do think it's right to truthfully share what the reality of it is. Everybody's not going to feel comfortable here. Everybody's not going to feel comfortable getting into this counseling kind of mindset. But somebody's got to be honest. If other parties to the transaction are not being honest with the consumer, then somebody's got to be, because we end up in this perpetual state of people not being able to afford what they're buying. They're making this stuff affordable without looking at the true capability of that buyer. I understand everybody wants the dream. Like, I want to play Major League Baseball. I want to be a professional athlete, but I can't. Why do we think it's expected or necessary that everyone should be the same when it comes to what they can afford? Everybody's not the same when it comes to what they can afford. And nobody wants to be honest, and nobody wants to be compassionately transparent about that. You don't have to be rude about the statement. You just have to look at the evidence. Hey, your combined household income, what do you want between you and your spouse? Do y'all want a 1-income home? Do you want a 2-income home? Okay, you got to be a 2-income home. Okay, your combined household income's $80,000. Hey, you can't afford a $500,000 house. It doesn't work. Let's back up here. But they said I can go FHA and the down payment can be, I can borrow, I can do this in a way that I don't actually have to come out of pocket. That's a gimmick. That's not real. It's worse than paying rent to get into a home that you can't afford, that you have to sell. It's like buying a car you can't afford. You could end up upside down in a market like this. There could be a real estate correction, hopefully not a crash, but we could see corrections happen. And that $500,000 house may be worth $400,000. Now you're in trouble because you got no equity. Somebody's got to be truthful as insurance agents to be the advisor if we have to. Because part of being the advisor and stepping up and doing that is we're protecting ourselves. We really have to. Like, we're the ones getting backed into the corner and blasted in the media and in articles as the big bad wolf. So somebody's got to stand up and show some truth in this conversation. And I volunteer us to do that. I'm sorry if you don't want to do that, but I think we don't have a choice.
I love that you brought up the statement that you want to play Major League Baseball, right? We all know that Shane wants to be the shortstop for the Yankees, right? Like, we all get it. If you didn't have that information, now you do. But you got the opportunity to throw out the first pitch at an Astros game. You actually did get to have your moment on a major league field. It wasn't the one you expected, but it was still a pretty cool experience, right? So maybe you encourage your client to buy that $200,000 house as opposed to that $450,000 house for that first home. And they're able to afford the insurance. They're able to afford the taxes. All of the things. It's not going to be the same experience, but it's still going to be a pretty good one.
I have the framed picture, the memories, my girls watching me throw out the first pitch. Nobody knows that I was one of 3 and it was a business promotion. Nobody knows all that. Just like my college degree on my wall, nobody has ever said, hey, what was your GPA? Nobody says that unless you're going to be a doctor trying to get into med school, maybe some law school stuff.
C equals JD. They will tell you that all day long.
There are some areas where it matters. Most places, it doesn't matter. You just have the degree and you got it. If you are a welder, your work is going to speak for itself. Throwing out the first pitch was a great experience. That it's kind of one of those, I didn't even know it was a bucket list item, but it became a bucket list item after the fact. That's cool. I got to stand on a major league field. I'm not getting paid to play for the Yankees. Still waiting on the call. That is a perfect example and illustration of maybe not the $500,000 home, maybe the $200,000 home. Maybe not the $200,000 home. Maybe it's $150,000, right? Maybe there's something else you can do. Maybe it's a fixer-upper. Maybe there's just a path you need to take that is a little bit different. If I go to school to be a teacher, knowing what the market is for teachers, what is being paid, argument aside, whether we pay teachers enough or not, you know what the market is for certain professions. When you go into that, you look into that. You go, okay, do I want to be a chiropractor or an anesthesiologist? Well, if you look at that, the anesthesiologist market pays a whole lot more. Educators don't become educators because they're in it for the money. When they go down that path and they say, oh, I'm going to be a teacher, it's awesome. We need so many teachers. I have a teacher as a daughter. And who knows, I may have a second teacher eventually with the youngest daughter. I spent 7 years on school board in our local community. I am a huge advocate of public education. all of these things are really, really good things. But if two educators marry each other and their household income is what it is, they're not going to buy a $500,000 house and afford it. It is just the facts of life. So this is where we are. And this is what we're not being truthful about. And I would say the same thing to the young producer. Hey, don't strap yourself with this debt that you don't need when you're starting out. You know, I had an agency friend, older agency friend of mine, very old school. I didn't agree with it. I never did it because my dad did not do this. I watched my dad as a banker drive a very old used minivan for 10 years because he was not going to go into vehicle debt while he had kids in activities and costs were high, etc. And I had a friend that was the direct opposite, sort of an insurance mentor of mine, of my dad. And I got to see this really interesting parallel. This insurance friend was not as wealthy as he appeared. He had a nice home and he always drove a brand new vehicle. He always drove a brand new pickup. He could not afford that brand new pickup. He leased that pickup. His opinion was you had to look like you had money in order to make money. This was his opinion. He was of that sort of breed of people. And then over here, I had my dad who was driving this old vehicle, the local banker, and he was buying land instead of cars. And he was planting seeds for the future instead of wasting money. And it's just the millionaire in the overalls kind of effect, right? And so I just feel like there's this miss that young people, that people who are trying to make it, so to speak, are getting bad advice because it's being made available to them because they can do it. They think they should do it, and that's not the case every time.
Is it okay to want those things? Absolutely. When Mercedes announced last year that they were discontinuing the C-Class and E-Class convertibles in the U.S. market, that's kind of like my dream goal. I've always wanted that pretty Mercedes convertible. And could I have made that happen? Yes. But it didn't make any sense. I love my car. It's in great shape. It gets me where I need to go. It packs enough luggage that I'm able to do all the things I need to do when I travel. Just because I wanted it does not mean that it was what was good for me, right? And so my Cadillac is still sitting in my garage. Sometimes we don't get what we want because we already have what we need.
Yes, it is 100% okay to want and dream of having those things. I have no problem with people wanting to make money, increase their wealth. I think that is the American dream. The problem is not being realistic or patient about the process, like I want it now type of mindset, because comparison is the thief of joy. I've watched both sides of it happen. My wife and I didn't drive the vehicles that we do today. Like I still don't. I drive a Toyota pickup. And so, but my wife drives a BMW. Okay. My wife, I've documented that on this podcast in previous podcasts. She drove a Chevy Traverse before. We had a Suburban, couple of Suburban. We had a used Suburban, right? She had a Maxima. These were the stepping stone processes as we had a family. And today as an empty nester, when we don't have a lot of people to haul around, it's just her 80% of the time. And the rest of the time it's me and her. She now has a BMW. She has and no, she doesn't have a BMW X7. She has a BMW X3. Why? Why does she need an X7? She doesn't need an X5. We could afford it probably, but it feels silly. She wanted a BMW, so we have a BMW. We can afford to do that now, but we couldn't afford to do that 20 years ago. That's the whole point. So-and-so bought a house when they were 26 and it's a $350,000, $400,000 house. It's a $500,000 house. Okay. What's the rest of the story? Are they on an FHA loan buying that house? Did they get a gift from parents or grandparents for the down payment? There is probably more to the story. Do not let yourself get sucked in. At the end of the day, it's pride, and that will get you upside down, and you can't focus on achieving your goals because you got sucked into articles that started this conversation. You become one of the casualties where you bought the home that you couldn't afford because they set you up for failure. And that's the part that I think us as independent agencies and as counselors and advisors, like, we are in this economy. We're the backbone of this economy. And there's nothing that says we should not be the one, the advisor, the truth talker about what really is happening here. If our friends in the mortgage industry and real estate industries aren't going to do it, somebody's got to do it. And it's going to help your business. That's my view. It's always helped my business to be that truth talker, to give people the reality of the advice. It's always helped my business. It's never hurt my business to do that.
I'm going to leave us today with this quote from Ray Lewis. You have to be willing at any moment to sacrifice who you are for what you will become.
Attitude's a choice. Make a great one.
Bye, y'all.
At the Integra Partner Network, we understand that carrier access is the key to your agency's success. That's why Integra offers direct access to top-rated personal and commercial carriers, ensuring your agency thrives in today's challenging market. And with our comprehensive resources, profit sharing and bonus opportunities, technology and peer support, all while you retain 100% of your book with no penalties to exit, Integra is ready to empower you and your agency to find sustained growth. Find your way to Integra. Visit IntegraPartnerNetwork.com today. That's IntegraPartnerNetwork.com.